So what you need to really work out on your model is that even with thinner margins, will you be able to build a scalable business?
So you enter early and you are able to, in the first year of investments, and you're able to hold it for 5 years, 6 years, you will be able to see a good outcome there.
Companies like CRED, they started with a wedge of credit card bill payment, but that's not where the majority of business come from. But then they diversified into a series of other products which they offered as a solution to the customer to increase their monetization from the customer. Let's say you are on an AI, right? You can place a food order directly from there. There's no regulations, there's nothing stopping from there. But then you can't do that in a fintech. Like if you need a loan, you have to go to an NBFC. No other company can offer it to you, right? So that end layer of transaction has to happen with the regulated entity or a fintech which builds a solution around it.
One interesting thing in fintech, which is different from other sectors, is you can't move fast and break things around. You cannot go with a half-baked product in the market. You have to go with a product in the market which is actually quite well cooked, right? And then you can obviously make it better. So that also, increases the entire gestation period from pre-seed to seed for fintech founders.
What's up? Where are you? On the way. ठीक है चल come fast now. Guys already here waiting.
Welcome Vipul to Open Tab. For context, for people who don't know, Vipul has been with us for more than 5 years. He's a venture partner with Gemba Capital and looks at fintech. So in this conversation with him, we'll be covering all aspects of fintech. Expect us to go from insurtech to credit to wealth across fintech, and it will be probably, I'm sure, a fun conversation for you. So welcome Vipul. Why don't you give a brief introduction about yourself for our audience?
Yes, hi Adith. Thanks for having me here. So yeah, I started my journey helping early stage startups with business development and growth. And then after spending a couple of years there, I started my own company called FinTech Labs, where we were building a digital lending platform as a service. So at that point of time, a lot of banks, NBFCs were trying to digitalize and automate their lending core processes, which is where we were adding a lot of value. So I ran that business for 5 years, then got acquired by Perfios. So as a part of the acquisition, I worked with Perfios for a couple of years, helped them set up their international business and the account aggregator business. So made some capital out of the exit. And that's when I think I was doing angel investments, is when I met you around 5 years back and started doing this. So after Perfios, I moved to Smallcase. So at Smallcase, I was leading new business initiatives. So helped set up the AMC business, the joint venture with Zerodha, which is now called Zerodha Fund House. And then I'm currently leading the credit business for Smallcase, where we are doing loan against stocks and mutual funds.
Got it. Super. No, great. So let's begin with one of the questions which I'm sure a lot of startup founders would have in their mind when they want to build in fintech. Is they've seen cases where they've started something, but because of regulatory changes, things have not worked out for them well. We are in a heavily regulated environment. Not how should a founder think about it? When he's thinking about an idea or about a business.
Yeah, I think this is a new skill set, which at least as investor, now I am looking in a founder which I am investing in, that the founder should be able to preempt or at least understand the direction the regulator is taking. So you can't just be working in an isolated space and come up with ideas, look at international analogies and come up with ideas, which is what early days of IndTech ecosystem people used to do, right? That's not true anymore. You need to read what the regulators are hinting at or what kind of consultation they are coming up with. Some of the leaders at SEBI and RBI have hinted at this, that when you are starting up, you don't have to read each and every regulation, but from the spirit of what kind of actions we are taking against other people, you will be able to get a hint whether we are okay with that or not okay with that. Maybe there is no guideline around it currently, but they will come up to it when you scale up.
Correct. So yeah, exactly. Innovation will always come first, and then the regulation will follow, right? So you have to at least make sure that you are taken, then kind of take that step. But everyone now, if you see all the recent examples in fintech, uh, all founders or businesses are looking for that wedge wherein through which they can enter the system and the pockets of a individual, right, or a corporate or a B2B business. And then once that is established, some trust is established, execution is done, then you move on to adjacent areas or a larger offering. And we've seen that happening right recently. So do you think that is the right way, or is there any other way people can kind of think about it in especially in the fintech space?
As far as I understand, I think that's how the ecosystem has evolved, or that what has worked for companies which have really done well, whether it's a B2C company or whether it's a B2B company. For example, if you talk about companies like CRED, they started with a wedge of credit card bill payment, but that's not where their majority of business come from. Whether you talk about Scapia, whether you talk about IndMoney, all these companies may have started with a wedge, but then they diversified into a series of other products which they offered as a solution to the customer to increase their monetization from the customer. And same thing on the B2B space. Like if you look at Perfios, Perfios started with a bank statement analysis as a single tool as a services to the banks. But then that tool just acted as an entry point into the banks.
Correct.
Today they are selling 15 other services to the same banks.
Correct.
To increase their ACV with the banks.
Correct. So it takes time in fintech because that building trust is the most important factor. You build it with a very strong product which you enter with, and then and then eventually to cover up the CAC, you have to have a higher LTV. And the moment you want to have a higher LTV, you cannot be just a single product company, right? Because then you are trying to get the maximum out of the wallet of that particular customer. And we're seeing that happening across a lot in the B2C companies as well, right? And I think that strategy makes sense, right?
Yeah, I think specifically in a market like India, where the average ticket size of whether a B2B or a B2C deal is so small that you need to be able to increase your LTV by doing multiple transactions with the customer. And if you're doing only one type of transactions, then you are limited by how frequently those transactions are happening. Hence, different type of transactions with the customers is what I think everybody is trying to achieve now.
And that's why you also notice that a fintech seed pre-seed deal is slightly larger, because you know that initially the tax will be high and I will need to burn money to build that trust and to build the product, and then eventually the sources of income will probably start coming in from multiple products, right? And that is what we've seen happening, right?
That's true. I mean, even the ticket sizes are higher because the CAC is higher, but even if somebody is trying to do something very different like a B2B2C model, even then they have to accommodate for this, that they have to burn money for a lot of time before they start seeing the value of increased LTV with the customer and then making money. So that risk is higher in fintech nowadays.
Of course. And especially because, see, what happens is it is eventually going to become a volume game, right? And luckily you are in a country like India where there is no dearth of like scale, right? Because any product you take, financial product, the margins are wafer thin, right? Maybe in bips, right? Like 100 bips or maybe less than that, right? So how do you build out an organization with such thin take rates, right? Except for, let's say, insurance premium, where maybe it could be 10% and up, but otherwise all of the products it's very very less. So as a founder, how am I kind of building this, right? Because I am then too dependent on VC money till probably my series A or beyond that. It's very difficult to become profitable, right? Unless of course you're in broking again. So how will these take rates go up, or what is it from a global peer comparison perspective?
No, I think the way the markets are going right now, the margins are not going to go up. In fact, it's going to go decline very drastically. With AI and automation coming into the picture, everybody is going to compete on the margins big time. The Indian market is currently having better margins than most developed ecosystems, right? So because of both these reasons, because of AI and because of the volumes of transactions in India and AUM in India growing, the margins are going to get thinner. So what you need to really work out on your model is that even with thinner margins, will you be able to build a scalable business? So now India is going to slowly go towards the same direction which and most of the other countries have gone, that in each space there has to be consolidation, and you need to figure out whether you will be able to be a significant market shareholder in the market or not, whichever market you are entering.
The economy is growing, the per capita disposable income is also growing, GDP is growing. So there's a lot more money in the hands of the people, right? Now, when you have excess money and what do you do with it? One is you increase your lifestyle a bit, you start spending a bit, but the other aspect is you also start saving more. You also start investing more. And maybe that is the reason you see in the last 1 or 2 years, the number of wealth companies which have kind of come in the market. You take Deserve, you take Centricity, Neo, Nuama, this, that. So is it all heading in the direction saying that, okay, now there is more wealth which is getting generated in India and someone needs to be professionally able to kind of manage this wealth? Because there is still very low awareness or education, right? So if someone is now thinking about building in the wealth space, right? How should that entire thought process be? Because it is still, I feel, a more service touch, high touch kind of a business, right?
Yeah, see, specifically on the wealth side, what has happened is that over the last few years, first that crypto boom and then the crypto crash,
Correct.
and then the real money gaming boom and the real money gaming crash
Mm.
had has very clearly indicated that there is intent of the people of India
Mm.
to invest money,
Mm.
but they're not getting the right trust indicators. They're not able to find the right product, which is why they resort to things like crypto.
Mm.
When that opportunity comes, somebody is telling them, okay, you can get quick money, then you see a lot of money flowing in. The kind of number of people and the amount of money which was being invested in crypto when the crypto apps were mainstream was something which none of the wealth apps are currently able to achieve, right? Same thing with real money gaming. The number of people who were putting in money there is not something which is seen by any of the wealth fintech apps in India.
Yeah. So basically, I think we keep arguing that, right? And I should say that was never a VC business. It was more of a private equity business, right? And the lines are still kind of getting blurred, and you see so many VC funds, everyone taking one single position on the wealth side, right? Uh, but it is anyone's guess to, and it's for all of us to see whether it will become a product led business, because it will still be a lot of services, lot of high touch points, and as a wealth company also you are either dependent on third party products, or even if you're making it in house, uh, it's always going, the scalability of it is always going to be, how fast can you grow is going to be a question, I feel.
Not necessarily, right? Like you earlier pointed out that India is doing much better as compared to the fintech infra, right? So like the UPI adoption, it's a product which has gotten adoption to that level, right? So similarly, there can be, and especially with now AI coming in, the services part is going to get minimalized, because what the services part does, it personalization is what it is offering, right?
Yeah.
It is able to understand what you need, what your kind of risk appetites are, and accordingly give you a solution, which is what can be achieved with the product as well today, right? So which is why I think a lot of scope of opportunity is there in this particularly wealth solutions market.
Yeah. Coming back to AI, you actually made a very valid point that AI is making the services get delivered personally. Personalization is there, and it's cheaper, right? So when it comes to AI in fintech, right, I feel the way to look at it is that if someone was doing something, like say a SaaS company was paying someone was paying a SaaS company to do a particular task, now they will probably have their own agents and things like that. So can you replace that with an AI and offer it for free? Right? And I think you were also mentioning about before this conversation that AI can be now used as a wedge. So tell us more about that, and also in the larger scheme, because the regulatory guardrails around. Uh, I think fintech founders are still more protected and not as much exposed as other consumer tech or other founders from the onslaught of, let's say, the large LLMs or an OpenAI entering India and building a fintech company, right?
That's true. So,
Yeah.
so fintech founders do have that kind of safety net, that the regulators are there. The same people which were kind of the same regulations which a lot of fintech founders didn't like are there acting as a safety net. Because let's say you are on an AI, right? You can place a food order directly from there. There's no regulations. There's nothing stopping from there. But then you can't do that in a fintech. Like if you need a loan, you have to go to an NBFC. No other company can offer it to you, right? So that end layer of transaction has to happen with the regulated entity or a fintech which builds a solution around it, right? So yes, there going to be change around the way the services are delivered to the customer. AI is going to have a big impact there. the way the solution is packaged, the AI is going to have a big impact there. But then the core rails, at least the regulated part of your business, is going to be quite secure because of the regulations. Now, coming back to what you were saying regarding SaaS and AI, right?
Like AI as a wedge, huh?
AI as a wedge. So what's happening there is very interesting, right? So a lot of these the SaaS companies which are offering solutions, a particular software service, or even not even the SaaS companies, even the BPOs or the outsourcing services as such being provided to any enterprise or any business in India today, those can get automated with AI very easily, right? And one opportunity which lies there is that you come in and play a role. For example, let's say as a financial controller, there's a lot of reconciliations you are doing. Now somebody builds that as a solution, as an AI agent, and gives it to you at no cost probably. Because how they will make money is that they will enable a financial transaction. For example, there could be supply chain financing being done there, because as a financial controller, a lot of invoices are getting processed through you. You have vendors, you have a lot of financial data about your vendors. So a lot of that can be used to build a new kind of business models. I think embedded finance is something which has anyways been picking up in the last few years.
Correct.
But this kind of acts as a big catalyst to embedded finance as a category.
So just taking a cue from what we discussed earlier, about using a wedge, getting in with a single product and then kind of cross-selling other products. But do you think like cross-sell really works in India in FinTech?
See, there have been examples on both sides of the aisle. There have been examples of companies not being able to cross-sell as well as they thought. And there have been good examples of companies which have been able to sell, like we were talking earlier, right? Whether it's about CRED being able to build a large lending business when they started off as a credit card bill payment. When we talk about Paytm has been able to do really good cross-sell versus what PhonePe is trying to do now, is trying to catch up to them in terms of cross-sell. So it's really about how you're positioning it, what kind of customers you have acquired, and what kind of cross-sell product you're building. Is there a fit there? So it's constantly a fight between finding a PMF again and again, because each cross-sell you're launching is a new PMF which you need to crack.
Correct. And actually, since distribution is so important in this industry, and of course the product also should work, right? Eventually product should make sense. If you are like given a hypothetical situation, there is one founder, and either he is good with the GTM and knows how to crack distribution, or let's say he's a very great product guy, a technical guy, a very good product guy. Whom would you choose and why?
See, I would, as I said earlier also, I would choose between them whoever has a more aptitude towards the market they are going into, right? I think both these founders can do really well. Somebody with a great product depth or somebody with a great experience of cracking a GTM. Both of them can do good, but what matters is the market they're entering. How good are they in terms of predicting the directions which the regulator is saying, trying to having unique insights into that market. Whichever one of them will have a better insights or unique insights into what they're doing, I think I'll prefer
One
that.
interesting thing in FinTech, which is different from other sectors, is you can't like move fast and break things around. Like you cannot go with a half-baked product in the market. You have to go with a product in the market which is actually quite well cooked, right? And then you can obviously make it better. So that also, increases the entire gestation period from pre-seed to seed for FinTech founders, right? And so you need that kind of a founder who has that mindset, who just doesn't want to kind of keep running, right? Who also understands how this product can get built and how the challenges are.
So talking about the space, where do you see the white spaces in FinTech now?
White spaces. So a lot of times people ask me this question that FinTech mein aur kya hai? Payments ho
every
gaya.
year that question keeps coming.
Every year that question comes, and every year you will see large FinTech companies getting built, right? And you see so many companies which are getting listed also. A lot of them are FinTech companies, right? Because the sheer market size is so big and the under penetration is overwhelming. You take credit cards. What is the penetration in India as compared to other countries, right? And if you're seeing the incomes increasing, people are going to use more credit cards. They're more confident about using credit cards and paying. You see savings. You see markets like tier 2, tier 3 markets. Some of these products have not even reached there, right? And you can build good businesses there. You look at, if you're going to export, someone has to do factoring, someone has to do export financing. How that process is. So every business in India will have something newer and innovative in terms of fintech which will get built, right? You take mortgage, you take home loans, it is still broken. You try to take a top up on your home loan, it's a painful exercise, right? Why can't I take a home loan as I take a car loan? Walk into a showroom and you know that the car loan is already there for you, pre-approved. Why can't I buy a house like that, right? With a home loan pre-approved. So there are so many things happening. Insurance side, if you take, why can't I assign my policy to someone else if I don't want to pay the last few years of premium, right? Why can't a product be created? We saw one company which was doing that, right? And the home loan thing also, there's a company which is trying to do that, right? Make home loan, create an entire funnel for orchestration of the entire home loans, right? Between the debtors and the developers.
Yeah, so like we earlier, we used to have that thing where we took a bet on an idea and then identified a company trying to do that. We did that with supply chain finance and CRED. We did that with loan against property and Finodea.
Correct.
Now, what is that one idea which you would say that you would like to find a company for?
True. I feel there's not one idea, but I feel a lot more will happen on the mortgage side, on the insurance side, because again, insurtech, there has to be newer products which has to come up, right? And there have to be ways of partnering with the product manufacturer, which new age startups can do there. And I also feel eventually in India, you will also have things of tokenization and kind of stable coins and some business built around that. There will be more embedded finance opportunities which will come up. So there is still a lot more to be done, and you just need to have good 2-3 such companies in your portfolio in every fund, right? And that's about it, right? So I think savings is still a big area. Loan against, people have done loan against shares and mutual funds, but what about a loan against, let's say I want to take it against an insurance policy, or I want to take it against something else, right? Can I do it very easily, right? Any asset, right, should be able to do it. So I think lot more will happen. It's up to it's wait and watch. It's for the founders to kind of come up with innovative things.